I'm Amaya and welcome to the show which traces the journey that a private company takes in transforming itself into a publicly listed company on the Colombo Stock Exchange. On that note, welcome to Going Public, a groundbreaking new TV series which is a joint initiative of the Securities and Exchange Commission of Sri Lanka, the Colombo Stock Exchange, as well as NTV Sports. Now, on that note, I'm going to hand you over to our very capable host this evening. He is the former director of the Securities and Exchange Commission, as well as a capital market expert in his own right, Mr. Vasula Premawardana. Vasula, over to you.
Thank you, Amaya. Welcome to Going Public, a program that looks at the aspects of listing your company in the Colombo Stock Exchange, and also not only your equity but also debt listing. And to discuss that, we have a very interesting panel that consists of people from the People's Leasing Company, who have not only listed their company but also listed debt. Here to talk about the listings is Mr. Pulasti Kumarage. He is the CEO and GM, and Ms. Inoka Jayawardena, Senior Manager Corporate Affairs and Investor Relations, and Mr. Sanjeeva Bandaranayake, Deputy General Manager Finance and Admin. Welcome to Going Public. Pulasti, maybe you can just start with giving a brief background of People's Leasing.
We started in 1995 as a 100% owned subsidiary of the People's Bank at that time, just to cater the leasing requirements of the People's Bank. And we started commercial operations in 1996 May with 3 employees and 10 million capital. And while doing business only for People's Bank for about 2 to 3 months, then there was a lot of potential for outside business, and we more or less knew the process, and we started doing outside business. Then in the meantime, there was a credit line the Indian government which gave to the government of Sri Lanka to import goods with Indian origin. In that, there was a substantial portion for transport, which was People's Bank and Bank of Ceylon. They were the apex banks for this credit line. And since we were 100% owned subsidiary of People's Bank and we were specialized in leasing, we managed to implement that through People's Bank, that part. And we directly imported Ashok Leyland and Tata buses for the public. At that time, there was a substantial demand for it, and that was the turning point of the company, and that gave a very good foundation for the in the initial stage itself to do business.
Right, so initially, firstly, you just had the credit line.
Initially, we did some business to People's Bank, like computers, vehicles. In the meantime, we started just looking at outside business, just started.
Right.
In the meantime, this credit line was there.
Right. So then you diversified along the way?
Yes, because the credit line was a very good opening for us, and we had to open LCs, meet customers, get their preferences, and then that was a bit of a long process. In sense, credit line was lasting for about almost 1 year.
Right. How about the other aspects of leasing, from factoring to have you all gone and diversified into those areas?
In the process, as we improved on the business, one by one we kept on adding other products and went into all other corporate customers. All that we kept on adding subsequently.
Right. So what kind of triggered your decision, I think, from 95 to 2011 when you are listed? What triggered the listing decision?
Well, as we were growing in the business, we were doing quite well. In fact, in 2002, we became the market leader in the industry after 6 years of operations, and we were doing extremely well at that time. And with the potential of business that was available at that time, there was a need to improve our capital base, and also the regulators, the central bank also, since during our short period, the business process that we had, they also made a request for us to list the company in the stock exchange.
Right. So basically, like most companies, of course, have a funding requirement, or they want a valuation requirement, but People's Leasing, being a part of People's Bank, and plus, I guess, a leasing company, had also other requirements that they went through when they listed, is it?
True, but even People's Bank, although we had their single borrow limits, we could not borrow anything against a single borrower.
Right.
So we had to look for other avenues,
I see.
which we resorted to other banks also.
Right.
One other concern was during, if I may add something, one other concern was when the company was growing, the gearing was becoming an issue, because you would remember at that time the companies were growing at a very high percentage.
That's right.
So this was one good avenue for the company to go and broad base the capital of the company. So the company, the balance sheet would be strengthened. So there is one other reason why we went for the IPO.
So how much did you raise from the public in your IPO?
We raised 7.2 billion at that time, which was the largest in the post-oil era.
That's right. So how, what is the experience of this IPO process? How did you find it? Challenging? Was it easy? Was it a cakewalk? How did that happen?
Nothing was a cakewalk.
Yes.
It was, we had our share of challenges. It was, I should say, a very interesting process, and a lot of new things that we learned also in the process. There were a lot of challenges because if you might see, we have a state ownership. So in a way we were coming for an IPO for a state institution. So those challenges were there. And on top of that, this was going to be one of the largest IPOs. So we actually had our concerns whether the market could absorb it. So those concerns were also there.
Okay.
And on top of that, all the other regulatory aspects that we have to meet. But we are happy to say we did it very successfully.
Right. Anything, Inuka? Yes.
Yeah, from the starting the process, actually, though there were many challenges, we didn't take that long actually to complete the process, because we were able to, because we had studied this and with the advice of our financial and legal advisors, we were more or less able to complete this whole entire process within about 5 months, 4 to 5 months period.
From the decision that you all took to go list, to list,
Correct.
to list was
To
5 months.
complete
That's
and
very short.
to come on the
The timing was perfect.
Yes.
There was a market appetite,
Right.
and the economic growth was there, and the market was bullish.
Right.
So all that we thought we will try to capitalize.
Perfect timing and perfect execution.
Yes.
Yes. Yeah, because some of the companies, of course, all of the companies that we had here on board here as guests were privately held and private companies. Some were family companies going, getting listed, and this is the first instance where we have, more or less a government, fully owned government subsidiary.
Exactly.
So how much of the percentage of the company was given to the public?
We gave it 25% to
25%.
public,
So
because we wanted to be in the main board.
Right.
So that was the minimum requirement.
Right.
So we went for that.
Right. So how did you decide how you do your allocations? How much institutions? How much individuals? Did you all make a decision in a certain way to broad base it broadly or to keep it within institutions?
Okay, you can. Yeah.
We actually wanted to give a certain percentage to foreign, the opportunity of investing to foreign investors.
Right.
And also we looked at giving us another percentage preference to our employees, our own employees, to make this an opportunity to invest in their own company. So and retail also we left because there was minimum requirements, so we kept within the minimum requirements, and certain rules were relaxed by the SEC purely because we requested for it. For example, 20% out of the 25 that we offered through the IPO, they allowed us to offer it to the foreign investors, because we were trying to attract foreign investors
Right.
to our company.
Priority allocation. Actually, that was the first time the CSE permitted that in an IPO.
Right. So what drove that decision? You wanted to have more long-term institutional investors, or you want to kind of give opportunity for foreigners to come and invest in Sri Lanka and get the taste of Sri Lanka? What drove that decision?
Well, we thought our image will improve if we have some foreign investors.
Right.
In addition to People's Bank and other local investors. So with this 20% allocation, we undertook a roadshow in Singapore, Hong Kong and London, and managed to get that 20%. I think we got around 25 foreign shareholders with us now.
Right. So this is very good coming from
Yes.
actually what we call a government institution.
Exactly.
Most people don't expect that kind of dynamism to actually work in these things, and it's quite surprising, or perhaps people must hear about this.
And
So
actually,
you-
going out, one of the drawbacks are sometimes the size. When you try to go out of the country, one drawback that we have is the size. Our sizes are small. So
Right.
at 7.2 billion, we thought here we have a company of a decent size which can be taken out. So that also was one reason why we decided to go out.
Right. So this is a very good opportunity for me to find out. Now, when you all did your road shows, how did that work out? In the sense, you all went in a team or with investment bankers, who planned the event, how many people are present, how would you suggest this? How
Of
did it
course,
happen?
the investment bankers, we should be thankful for them.
Yeah.
They did a marvelous job behind us, training us. And one thing was, it was a totally different experience in marketing an IPO outside, because
Right.
there were drawbacks, there were negatives in people's minds. We had to go against that. And even sometimes looking at a leasing company, when looking at our exposures also. So we had to go and market the real strengths the companies had. So the investment bankers, the guidance they gave in how to market it, because as I said, it's a very, very novel experience in our part. We have not done it before.
Right.
But with their help, happy to say we did a very good job in marketing ourselves.
Right.
Actually,
So
as Sanjeeva said, it is the investment bankers who did the whole thing. We were guided as to how to present it, what sort of questions that they will ask, what are the answers that we should give, and it is they who planned our entire itinerary.
Right.
And that
So you
was
had good guidance
Yes.
with the investment bankers. So you had two lead.
two companies, Capital Alliance
And NDB Investment
NDB
Bank.
Investment Bank.
We will come back to the process again. We have to take a short break. We will be back in a short while. Welcome back to Going Public. We have People's Leasing with us today to discuss not only their IPO but also their debt listing. Yes, Sunapa, you were talking about, I think, the road shows and how it worked out. So did the whole team go to various countries? How did that happen?
No, actually, on the advice of our investment managers, we selected from the top level, and officials at the top level only represented the company, because you had to make a case before your prospective
Right.
investors. So you have to know in and out as a company. So people with that knowledge and expertise only were selected to represent the company at roadshows.
Right. So how did you find typical show? For example, you said you all went to London, but Hong Kong,
And
US,
Singapore.
pardon?
And Singapore.
And Singapore. So in London, for example, how did you find the audience reactions?
There were meetings with small group meetings, lunch-on meetings, breakfast meetings, and one-to-one chats. So they were asking us a lot of questions with regard to the country, with regard to the company, and even our parents, so which we were fairly prepared.
Right.
So after the initial one or two meetings, we were well prepared for it.
Prepared, right.
Yes.
So from that 5% that you had a specific allocation for, was it oversubscribed from your road? after
Almost it was taken up. Almost, I mean, 20% of the 25% was the one that was allocated. We almost got 19% out of it.
the road? Wow. So that's very good.
Because
This is
actually what
quite
really happened was, it was given for foreign investors plus unit trust. Unfortunately,
Right.
there were no takers from unit trust,
Right. So the local institutions actually didn't see
Yes.
the value, the foreign institutions saw.
except there's one small unit
That
trust.
was a small portion.
Right, right. Okay, just to go back a few steps before the road show, which is, I think, just the pre-IPO event that you need to have. Again, I'm very curious, because this being a government institution, and people have this idea about government institutions. So did you have to do drastic changes to set the company on this track, on a more transparent, publicly listed company?
No, not actually so, because we were, in any case, even prior to listing, we published our annual reports. And prior to that, we were more or less selected as the best annual report, and we, at that time, our governance, the transparency, and our systems are in place, and we only have to improve that and bring the setup to the public entity culture, which we did gradually. It was not a very drastic one, because we were being prepared for it for a long time.
Right.
To add a few to it, actually, coming from a government background, our board composition was mainly People's Bank directors, so that was one thing that we had. So actually at that time, the independent directors, the board subcommittees, audit committees, which are supposed to be there from the governance point of view, we were not having. So there was one positive which we derived out of it, where that composition had to be changed. So that was the only minor thing in addition to what Mr. Kumarage said rightly. Otherwise all the other processes we had, so it was nothing new going public, but these small changes we had to do.
Because in the prospectus itself, these things had to come, which we, as he said, we didn't have those independent directors, subcommittees, audit committees, all that, which we kept it, completely regularized prior to the list.
So you all managed to bring it in without any difficulties and challenges that maybe perhaps some other family-owned companies may have had, because you are already somewhat transparent, like you said, you all did your annual reports. Right. And also, in fact, I must comment that you all have a investor corporate affairs and investor relations person, which some companies, very largely public companies, don't have an investor relations special officer. So your job is to talk to investors and institutions?
Yes, my job is actually to help assist the investors, mainly shareholders, whenever they need information and guidance, and I'm the contact point for them. So
do you have any inquiries? I mean, is your day all is answering phone calls from shareholders?
Yeah, especially when you're declaring dividends and all, and during AGM times, you have constant contacts with your shareholders.
Right.
And that was a position that we created subsequent to our listing. And even when we go abroad on various other things, we make it a point to go and meet some of the major people. They also used to come here, and we also make it a point to go and meet them, and any specific changes that we have which is going to, we keep them informed.
Actually, the response that we are getting from investors are amazing, because there was one time I think no one was looking at no one, but today you get so many. Now there are at least for a month 1, 2 or 3 investors come and meet us, and some of these people are first time to the country, first time to the company. So it shows the interest that is there on the country and the company, which we think even if not from the company's point of view, it is a very plus point from the country's point of view. The interest that the foreign investors are showing in the country,
economy, their confidence in the economy. It means they have confidence.
And we see a difference now. I mean, a lot of fund managers and investors are looking at us now.
Right. Because those days when I was in investment bank, obviously we brought institutional investors from a brokerage, from an investment bank's point of view, and took people to see listed companies. But what you are saying is they are directly approaching you all and coming to the country first time just to meet you all, which is a quite good thing, as a good mark of your company's capacity.
And in fact, even we are a party, even this Invest Sri Lanka program, done by the CSC and SCC also. And where it has given us a lot of opportunities to meet other investors whom we have not met
now
earlier.
Recently they went abroad, I think to Singapore.
Singapore, Hong Kong, even Dubai. Malaysia and in India. Dubai. So we went Dubai. Now they are planning to have one in London now towards the end of this month, which we will be participating, and that has given us a lot of opportunities.
So going into the process, just to recap, obviously you said there were challenges, there were a few changes you all had to make prior to your IPO. You all did local and foreign road shows, and you also had a very special arrangement where out of the 25%, 20% is foreign institutionally held, and 5% will be for the local market, and you had quite a successful IPO.
20% of the 25%,
not 20% of the
25%.
It is 5% of the
almost about 5%.
5%, okay, 1/5 of it. So post IPO, how did your lives change from being a not listed company to a listed company? Did you all see any changes, new challenges?
The day-to-day changes of like the regulatory requirements, then the things that we had to do. But as we earlier said, the company had a lot of processes, like Mr. Kumarage said, the annual report. So those processes were already there. So in that way, there were no major challenges. But on top of that, the day-to-day, the listing requirements, the ongoing requirements that you have to comply with. So those challenges are there. I won't call it challenges, the things that you have to comply with. But we don't see them as major hurdles or major challenges to they are good things. It brings a lot of good things into the company also.
Right. Nothing about your strategy and your way of doing business actually had to change. It was just
No.
We had to bring few improvements
Right.
here and there, but other than that we were quite okay, because it improved our image, the brand name,
right.
all that.
So having foreign institutions as shareholders, do you see them acting in any different manner than perhaps our local institutional investors in their manner, how they look at your company?
Yeah, they look for a lot of information. They make lot of queries whenever they come and meet us. They want to study the industry, the company, what are our future plans, all that. They are very concerned about the future plans of the company.
Right.
They are actually always very long-term investors. They don't normally take a short-term. That is the main difference. That is our local also. There are investors who are long-term, but these investors are always very long-term. So normally they are not worried about the price fluctuations which happen
in quarters
in a short period. But they are worried only about the long-term. As long as they are confident of the long-term, they come with the company. So that is one thing which we have seen, the difference which we have seen from the foreign investors.
We also talked about benefits. I think you mentioned a couple of times that it was good for the brand image. What else would you personally list as benefits from being a listed company?
It gave us a lot of avenues for funding, and even to issue a debt or even in equity. And even when in the process of our diversifying, that has really helped, because subsequent to that we have diversified, and in that process also that has really helped us. Basically funding.
Yeah.
People's Leasing was, in a way, it was the largest NBFI in the country, but maybe a fact which was not known, because People's Leasing in a way was a low profile company, because we are not a company which goes into major way into advertising and things. But the IPO has actually brought us out, because it shows at least now people have got to know what kind of a company this is, and they at least know there's a company which caters to this kind of segments, doing like this at this kind of a balance sheet size. So in that way, a lot of positive awareness has come towards the company through the IPO.
Because a lot of research reports, brokers and research guys were putting reports with regard to us, and we were among the best 25 highest capitalized companies. And even with the listing, even in Business Today magazine, where they selected 25 best companies, we were ranked in number 18 in the first year itself. So all those things really helped us only after listing.
Right. Thank you, Boris, for this clear to us. We'll be back shortly again with Going Public, talking to People's Leasing shortly. Welcome back to Going Public, talking with People's Leasing and talking to a panel who is going to discuss the debt listing now. Just going back to the post-IPO, you mentioned the benefit of funding. So interestingly, also had one of the biggest debt IPOs.
Yes.
When was that?
That was last year.
Right, so 2011.
2012 or
2013.
13.
Right, so 2 years post IPO.
Yes.
Where you actually came with a huge 7 billion IPO, is it?
6 billion.
6 billion IPO, and then
7
you
billion
come.
IPO, sorry.
Yes,
7.2 billion IPO.
Yes, our IPO was
That's
7.2.
right. And then you came for a debt
6 billion.
6 billion.
6 billion. So we raised quite a lot of money from the market. How would you say your debt listing process was?
Sanjeev, you can.
Our debt listing process also was similar, because now once we have had the experience of going public, so actually initially also, once we can remember, we wanted to do a listing, but since we are not a listed company, it was a hindrance and we had to give it up. But then in 2012 in the budget, it was allowed in order to develop the debt market, to come out with debt listings where the investment was tax-free in the hands of the investors. So us being a proactive company, we thought here's an opportunity for us to go to the market, and here there is another avenue of raising debt because people's leasing was growing at that time and funding avenues were becoming a challenge. So this actually was a silver lining for us, because a new avenue. So we thought we will again come to the market with a big bang. So that is why we decided we will come with the 6 billion, which was again the largest at that time. And we had to again comply with the usual CSE, SCC and our regulator, the central bank, those regulations. But it was not a major challenge as such. Again, the worry was because of the size, whether the market could absorb it. But again, our investment bankers helped us in that also. So we could sail through very smoothly.
That was soon after the budget proposal for tax purposes.
Yes, just to recap, what you're saying is that because you had your IPO first and foremost, you were more familiar with the whole process, and then you went for the debt listing. But why? What was the decision that you decided to go for a debt listing as opposed for perhaps a secondary offering again?
Because as I said earlier, we were growing at that time. So one of the challenges that we had was the funding challenges, because the funding needs of the company were becoming bigger and bigger. So in the budget process, when this was announced, and when there was this new opportunity coming in, we thought this will give us an opportunity to develop another debt instrument, a new debt market. So that is why we thought we will go into that in a big way. So this was in addition to the traditional funding sources that we had, like the banks and the securitization, and initially we have had the IPO. So this was a new opportunity for us.
Right. Because in the budget there was some good benefits for if it is listed and rated, if this debt instrument, there were a lot of exemption from income tax, and for an investor it was a very good, it is without withholding tax and income tax from that interest.
Right.
So that was an opportunity, as Sanjeeva said, which we grabbed quite early. In fact, we were the second to come to for that instrument after the budget.
So obviously you have been actually more progressive than perhaps even privately held companies.
Exactly, because we had at that time we were very well placed. We had 2 foreign ratings at that time. We were the only company who had 2 foreign credit ratings. Right. So all that helped us.
When you say foreign ratings, so not the local Fitch or local thing?
We had Fitch locally. We were the highest rated finance company, and we went for S&P and Fitch International also.
Fantastic. So you have really got quite a boost on the ratings side.
So we had all that in place, and we were among the best 10 corporate citizens of the country, and annual report was giving us for gold award for 5 consecutive years. So all that helped us, and we thought we will get this opportunity and treat this also.
Very good. So what would you say? I mean, of course you said there were challenges and the process was easier, but if you go on a kind of looking at the debt listing process itself, how does somebody go about doing it? Where is the starting point? Once you decide that you want to have a debt listing, do you again go back to investment bankers, or was this an in-house?
First thing is, I think you have to be sure about the market. One thing is you should know what you want, and you must have a very good idea at what price that it will come to you. So number one, if you are comfortable there, next thing is, yes, you must have very good investment bankers behind you, maybe especially depending on the size that you want to do it. And then the next things are the regulatory approvals which will come. So this is not a very short process. It will take a little bit of a time. So at least a good 1-2 months planning is required. So if you think that time is opportune from rates point of view, and if you think the market, you can tap the market and get what you wanted, I think that is the time for you to consider a good debt listing.
Right. So especially once you are already a listed company, you are already doing your disclosures, you already have various things in place to facilitate all that. What you are saying is the debt listing is actually a decision. And once you do that, it's the incremental increase of work is not necessarily the same amount.
Yeah, because you have gone through the process, you are familiar with the process and the regulatory wise. So it is another additional thing that you have to do. So that's all. So actually it's an incremental thing, as you mentioned.
Only more work for Inoka, is it?
It is more or less the same kind of work, except for a few areas that you have to additionally look into, because the whole process actually for us took about only three months. From the approval to the listing, it took about only 3 months. If you really plan it, and once you have taken the decision, it's just a matter of execution.
Right. So just like your equity investors who constantly ask questions regarding the state of the company, do you find the same thing with the debt investors, or do they leave you alone for the last
Not
next 5
very
years?
much, not very much, because if we look at the base, if you look at the equity base, it's about 10,000 odd shareholders, more than 10,000. So the debt market, I think, still developing. So the takers are not that much.
Right. The institutions are smaller numbers.
Yeah, correct. And therefore, the inquiries that we get is not as constant as from the equity holders.
Right. So the 6 billion you raised that debt, they are again local institutions and foreign institutions, or did they have to go through the same process of road shows and so on and so forth?
No, we didn't do that. It was only local.
That was a total local
Everything was
exercise.
local.
Totally locally
Yes.
taken up by local private institutions, unit trusts, so on and so forth?
It's a combination of all the
Combination.
parties.
Banks, if you want
Banks,
to
individuals, high net worth individuals, insurance funds, trust fund, unit trust, all that.
Right. So the compliance requirements and the disclosure requirements, both for the as the equity side and the debt side, do you find that as a cumbersome amount of work, or is it
Not
manageable?
really, because we were more less geared to that. As Mr. Kumarge earlier mentioned, in terms of reporting, we were almost in par with all the listed companies, except for a couple of things that we had to improve on. Therefore, it was not a cumbersome exercise, and I think the outcome of it is far greater than what you have to, the process you have to really go through, because that actually shows how accountable you are, and it shows how transparent you are, and that of course shows how responsible you are as a corporate citizen.
Right. So of course, as long as you all have a good transparent process which already in place, you don't think the compliance is too cumbersome.
The benefits far outweigh
amount of
the
work
process.
you have to do. Yes,
Once you-
right, thank you. We will be back with Going Public, talking to People's Leasing after a short break. Welcome back to Going Public. Here we are talking with the people of People's Leasing and discussing their IPO and their debt listing. Yes, we discussed quite a lot actually. We covered the IPO process, we covered your debt listing decision, the debt listing process. Do you see any disadvantages? For example, loss of control of course may not apply to you all, but how about maybe competitive secrets, or in this being transparent process, do you all lose out anything?
Actually, competitive secrets can be one thing that people worry about, but if you look at how a company competes, you will see mainly it comes from the culture of the company, because that is now, if you look at a company like People's Leasing, it all depends on people who deliver in the market. So this is a part of the culture of the company. So what we feel is, even if we talk about it openly, even if we go and tell our secrets, we don't think it is easy to copy something like that, because what is in our DNA is not very easily captured by anyone else. So in that sense, I don't think anybody has to worry about your competitive secrets and such, maybe even on pricing, things like that, because as long as you have a very good culture delivering, we don't feel anyone can copy that very easily.
Right. But anyways, you don't have to disclose your strategies in any of the disclosure that is required. I think mostly what is required is the financial statements and directors' positions, or so on and so forth. And I think even in situations where you might be discussing, perhaps a merger or another listing or any other things that are price sensitive, I think you are able to keep it a secret until you disseminate all the information to everyone at the same time. So it's actually a myth, and which we try to ask the companies, how do you all handle it? Of course, now companies like Apple and Samsung, they have various sales secrets that they can't bring out. So disclosure is not necessarily you disclose your strategies
And come
yes,
out.
it's
You are
more or
right.
less the financial aspects of it. Anything to add, Pulasti?
Yeah.
On
With
the-
regard to,
Yes, the competitive secrets and any other disadvantages are being listed?
no, actually we found it is more advantageous to us, and it improved our transparency and our image, and a lot of people had faith in what we are doing.
Right.
If I may add something to that, I think disclosure, complying with disclosure requirements in a timely manner will actually enable your shareholders to make informed decisions. So thereby you are actually being more accountable and transparent, and you increase the confidence of your shareholders. So.
Right, fantastic. Because at the end of the day, you go about doing your business, and the share price will have its fluctuations depending on the information they have or they don't have.
Yeah.
And I think it's the onus is upon the company to disclose proper information so that the pricing can get affected, or the investors can decide where to take the share to. How about when it comes to the secondary offering, or a second time you want to go to the public again? Have you decided that maybe you want to do this again and do maybe another debt listing, or maybe another company or subsidiary, or want to bring out in the public arena?
Where People's Leasing is concerned, I don't think there is any need for us to go to equity, but we might raise on debt. But equity might be in a bit of a long-term strategy. Right. But we have we have 5 subsidiary companies, out of which we have 100% owned. All subsidiaries are 100% owned by People's Leasing and Finance. Insurance company, now it is a regulatory requirement. All insurance companies, they have to split their life and general for 2 separate companies, and all these companies have to be listed by 2016. Our company is only 4 years old. So since we have a lot of experience in listing the company, our parent company, and since we have realized there are a lot of benefits in after getting listed, so we want to expedite our listing process for the insurance company very soon.
Right, so you'll be one of the first again trying to come out with your subsidiaries also listed, is it?
I think
Not
there
more.
are a few companies
Yes,
where subsidiaries
already.
are listed. Yeah.
Right. What else might you want to add for this?
Actually, from a listing point of view, looking at People's Leasing, whether we need another listing will depend on the growth that we are facing. Especially we in our plans, we will be closely watching the capital adequacy and where it is going and where our gearing ratios are going. So the moment we see that there is a requirement, we know that there is a ready market for it, and we know how to come out and do a listing. So that will mainly determine at what point that we will have to go for additional listing, as Mr. Kumarage said.
Right.
But again, looking at the current growth plans, and the 7.2 billion actually gave us a very good cushion. So there is no real need, as Mr. Kumarage said, for another listing right now, but the opportunities for the subsidiary company.
Right. So now with this new consolidation of the financial sector coming, do you see that affecting any of your decisions, and how maybe you might be larger, or you might be able to raise some funds? Actually, I was coming back to the point of reason to capitalize again. Maybe you can merge, or maybe you can do acquisitions where you can be a larger, and you will have the capacity to do so. Do you see this consolidation thing as something that is positive for you?
Yeah, with consolidation we will definitely grow the company. We can improve on our asset base. What we expect is to pay them out and buy the company instead of giving a share swap. That is what we are envisaging.
So you are looking for 100%.
Yes, that is what we are planning. For the time being, I don't know how it will work. It is too early for us to predict.
Right. And of course, like what you mentioned, you have a good cushion of capital, and you don't need to come to the public for that, perhaps until later in the future. Right. Anything else that you might want to add? Because basically, what we are trying to do is entice other corporates to, one, list their companies. Secondly, also to think of debt listing as opposed to going directly to the bank. So from your personal experience of both having an IPO and a listing of debt, what can you tell to the viewers out there who might be interested about?
It gives us a lot of enormous avenues for funding, even from outside the country, and improved our image, of course, as I told earlier.
Right.
But where funding is concerned, after listing, we were during this short period, we managed to get twice foreign funding. One is a direct funding from one bank, the other one is a loan syndication. and
Right.
that process completely opened us after the listing of the company.
Listing actually takes a company to a totally different level, because any company, even if it's closed held or however you are growing, I think to take it to the next level, a thing like listing is a must, as we see, because initially we were also very happy with what we were doing. The company was doing very, very well.
Right.
But now we see after the listing, as Mr. Kumarage said, the other avenues that has come our way, the foreign funding, the foreign debt which comes our way, which was never an opportunity which was there earlier. So I think when you want to take it to the next level, a company will definitely have to consider a listing and take that path.
Right. In closing, Inoka, how as an investor relations officer, anything?
I think
For 1
listing
minute?
has, as both Mr. Kumarage and Sanjeev mentioned, listing has taken us to another level. Listing has actually increased the image, corporate image, and there is more awareness amongst our stakeholders, all stakeholders, not just shareholders, all stakeholders, like even the suppliers, our financial partners, all they have now more awareness about the company, and they are like now more willing to enter into partnerships with us,
Right.
whether it be business or funding. So I think in all listing is I think is a to be listed on the Colombo Stock Exchange is a prestige.
Very good. Thank you very much for coming on Going Public. I think you have very informed panel, which I think the audience would have loved to hear your listing stories on the debt and the IPO. Thank you very much.
Thank you.
Thank you very much for watching Going Public, and we will see you again next week with another interesting panel to discuss listing your company and listing your debt in Colombo Stock Exchange.